I was lucky. I found something early that turned me on. But you don't want to take a job just for the money. You don't want to take a job for an organization that you really don't feel good about, or work for people that you don't feel good about. You really want to be excited when you get out of bed every morning. And it won't necessarily be the job that you have 10 years later, but you'll be learning so much as you go along. And I took a job with Ben Graham, my hero, and it, I never asked the salary, and I found at the end of the month when I got my first paycheck what I was earning, because I just knew it was the right thing to be doing.
Warren Buffett didn't build a $100 billion empire by chasing headlines, trading crypto at midnight, or jumping on the latest Wall Street fads. He built it through silence, patience, and razor-sharp clarity. His journey began with a paper route and a hunger to understand how money really works. Not just numbers, but the psychology behind them. While most investors treat the stock market like a casino, Buffett treats it like a storefront of businesses. He doesn't buy stocks. He buys ownership in real companies with real cash flow and real futures. His approach is simple but profound. Wait for the right pitch, swing big when it comes, and ignore the noise in between. No charts, no hype. Just timeless wisdom passed down from mentors like Benjamin Graham, who taught him to be a realist, who buys from pessimists and sells to optimists. And that's the secret. Buffett isn't flashy, but he's fiercely disciplined. He doesn't predict the future, he prepares for it. In an age of instant gratification and algorithmic chaos, he remains a calm force of logic, proving that slow, steady, and smart still win the race. His strategy isn't just about money, it's about mindset. And in this video, we're going to break down that mindset step by step. The rules he never breaks, the filters he uses to spot great businesses, and how you can apply his exact playbook in your own investing journey. This isn't just a tutorial, it's the untold story of how one man rewrote the rules of wealth forever. At the heart of Warren Buffett's investing brilliance lies a deceptively simple truth. Price is what you pay. Value is what you get. To most, a stock's price tag defines its worth. But to Buffett, that number is just noise unless it reflects the true intrinsic value of the business behind it. He dives deep into balance sheets, earnings, future potential, seeking out companies that are fundamentally strong yet undervalued by the market. But he doesn't stop there. He demands a margin of safety, buying only when the stock trades well below its true worth, giving him a cushion against surprises and mistakes. It's like building a bridge that can carry 10 tons, even if only 5 are expected. While crowds chase trends or flee crashes, Buffett stays calm, knowing that emotion is the enemy of wealth. He capitalizes on irrational fear and waits with monk-like patience. In fact, patience is his superpower. The stock market is a device for transferring money from the impatient to the patient, he says. That's why he invests with a long-term horizon, tuning out the day-to-day noise and locking in for the marathon, not the sprint. His favorite holding period. Forever. Because Buffett understands the magic of compounding, the silent snowball that builds massive wealth when given time. He reinvests, repeats, and watches time do its work. And through it all, he refuses to gamble. He doesn't speculate. To him, real investing is about owning something that produces, not betting on what might rise tomorrow. That's the Buffett way, anchored in logic, wrapped in discipline, and driven by a vision far beyond the next earnings call. It's not flashy, but it works. Over time, it turns snowflakes into avalanches. When Warren Buffett evaluates a company, he's not looking for flashy growth or tomorrow's trending ticker. He's hunting for castles with unbreakable moats. Think Coca-Cola, not just a soda, but a brand so deeply woven into global culture that competitors can't touch it. That's a moat. It might be a brand, a patent, a cost advantage, or a network effect, whatever makes the business hard to copy and harder to beat. But Buffett doesn't stop at strength. He wants clarity. If a company isn't within his circle of competence, he walks away. The size of the circle doesn't matter, he says. Knowing the boundaries does. He sticks to what he understands, where he can predict the outcome. Predictability matters. That's why he seeks businesses with a long, consistent history of earnings, not one-hit wonders. But even the best business can be ruined by bad leadership. Buffett looks for managers with integrity and intelligence, people who treat shareholders like partners, not pawns. He watches how they handle capital. Do they reinvest wisely, pay dividends, or buy back shares when it makes sense? Smart capital allocation is non-negotiable. Then the numbers speak. Buffett zooms in on return on equity, how well a company turns investor dollars into profits. He avoids debt-heavy firms and prefers those with strong, free cash flow, the lifeblood that keeps businesses flexible, resilient, and self-sustaining. No need to borrow when you generate your own fuel. Finally, even if all the stars align, Buffett won't buy unless the price is right. He looks to pay 50 cents for a dollar, using tools like discounted cash flow to estimate a business's true worth, or checking the P/E ratio to see if it makes sense within its industry. Because at the end of the day, even the best company is a bad investment if you overpay. That's the Buffett blueprint. Unshakable moats, honest leaders, healthy books, and a price that makes your wallet smile. Warren Buffett's rules of investing aren't just guidelines. They're sacred. That doesn't mean he's never seen red on a stock chart. It means he avoids permanent losses that come from careless, emotional, or uninformed decisions. Risk comes from not knowing what you're doing, he warns. And that's why his next rule is just as crucial. Only invest in what you truly understand. If you can't clearly explain how a company makes its money, you have no business putting your own money there. Buffett avoids complexity like the plague, because confusion leads to mistakes. And when he buys a stock, he's not watching tickers dance. He's buying a business, a real one, with workers, factories, cash flows, and customers. Someone's sitting in the shade today because someone planted a tree a long time ago, he reminds us, urging investors to zoom out and see the forest, not the day-to-day flicker of falling leaves. He also avoids debt and leverage like a landmine. To him, borrowing money to invest is like juggling chainsaws. You might look daring, but the downside can destroy you. It's insane to risk what you have and need for what you don't have and don't need. And above all, Buffett's real superpower isn't brains, it's patience. In a world chasing instant gains, he waits, watches, and lets time compound his decisions. That's where the real magic happens. The stock market is a device for transferring money from the impatient to the patient, he says, and Buffett has always been the most patient man in the room. If you want to invest like him, don't just copy what he buys, copy how he thinks. Buffett's philosophy isn't just theory. It's been battle-tested through decades, with legendary wins that prove the power of patience, conviction, and clarity. Take Coca-Cola. Buffett bought it in the late 1980s and never looked back. Why? Because it wasn't just a drink, it was a global brand with a moat a mile wide. Through wars, recessions, and shifting consumer trends, Coke's reach and loyalty held strong, and so did Buffett's belief in it. Then there's American Express, a classic example of investing when everyone else runs. During the 1963 salad oil scandal, the market panicked, but Buffett saw through the fog. He understood the core business was solid and seized the moment, locking in a deal that would multiply for decades. And Geico, a case study in elegant simplicity, a low-cost insurance model, direct to consumer, crystal clear, to understand right in Buffett's wheelhouse. His early belief in Geico turned into a full acquisition and became a crown jewel in the Berkshire Empire. But even the oracle can evolve. Enter Apple, a tech stock, yes, but to Buffett, it wasn't about bits and bytes. It was about brand, loyalty, and ecosystem. A modern moat with deeper consumer roots than most legacy brands. He adapted without abandoning his principles. And the results speak for themselves. From 1965 to 2023, Berkshire Hathaway delivered average annual returns of 19.8%, nearly doubling the S&P 500's 10.2%. Over time, that's not just better, it's generationally life-changing. These aren't just investments, they're proof that Buffett's strategy doesn't just work on paper. What truly sets Warren Buffett apart isn't just how he invests, but how he thinks. Beneath the billions is a man obsessed not with money, but with learning. Every day, Buffett reads for hours, newspapers, annual reports, books, stacking knowledge like bricks in a mental compound of wisdom. Read 500 pages a day, he once said. That's how knowledge works. It builds up like compound interest. But intellect alone isn't enough. Buffett's real superpower is his temperament, an unshakable calm in the face of chaos. When markets melt down, he doesn't flinch. While others panic, he keeps a cool head, echoing FDR's words. The only thing we have to fear is fear itself. It's that emotional control that has helped him thrive where others falter. And perhaps most inspiring is the simplicity of his life. Despite his enormous wealth, Buffett still lives in the same modest Omaha house he bought in 1958, eats McDonald's for breakfast, and doesn't chase luxury. It's not just humility, it's clarity. He understands what truly matters. Success is a lousy teacher, his friend Bill Gates once said. Buffett knows that staying grounded is the key to staying great. And yet, this modest man has also shown an extraordinary ability to adapt. Buffett proved this by embracing Apple, recognizing that the modern moat could live in your pocket, not just in your pantry. He's not just a master investor, he's a master of mindset. And that, more than anything, is what made Warren Buffett the Oracle of Omaha. Warren Buffett's strategy isn't a riddle wrapped in mystery. It's a living philosophy, rooted in clarity, patience, and principle. It's not about chasing what's hot or timing the market with wizard-like precision. It's about recognizing that great businesses, bought at sensible prices and held with conviction, will compound into empires if only you have the discipline to let them. His $100 billion fortune wasn't the product of luck. It was the reward for thinking long-term in a short-term world. Buffett didn't try to predict the tide. He built a boat strong enough to ride it. His strategy is like a river, steady, deep, and powerful. And through this step-by-step journey, we've taken that river and placed it in a box, not to contain it, but to understand it. To see the current clearly, to feel its flow, and to guide our own financial journey with its quiet wisdom. Because in the end, wealth isn't won in a frenzy. It's grown with care, insight, and time. So the next move is yours. Will you chase the noise, or will you, like Buffett, learn to listen to the calm beneath it?